Peruzzo. He's Euro area economist at RBS Global Banking. Silvio, a pleasure to have you back on the show. Let me start by asking you what you expect will be the amounts on offer tomorrow. Many people believe it will be very close to the about 470 billion euros that went out in the first LTRO.
Well, so that's currently our expectation. We believe the operation is going to be very similar to the first one in terms of take up, although some information that we had today seems to suggest that there might be some upside risk to that number. Generally, I would say that any take up north of 600 billions will probably be seen by the market as a very significant size and will have a major implication for confidence, but anything below that I think is pretty much in the prices already.
In the prices already. Silvio, I must ask you this. What are banks doing with the money that they got in the first LTRO, and what are they expected to do with the money that they will get potentially tomorrow?
Well, I think the very initial reaction of the banking system was making sure that the redemptions, the bank bond redemptions, the funding requirement for the first quarter of this year was met. In fact, interestingly enough, if you take what's the new liquidity out of the first LTRO, so not the total take-up, but just what of that take-up is new liquidity, that exactly matches what are the funding requirement in terms of redemption pay down of the European banking system as a whole. So I think that was the first thing that banks did with that, paying the redemption, making sure they had the money. But the most recent information that we have, especially in Italy and Spain, seems to suggest that some banks are starting to use that liquidity to put in place some so-called carry trades in the government bond space. So, you know, they buy the sovereign bonds, given that they take cheap liquidity from the ECB, they can generate some profits by holding some sovereign bonds, and that has got some virtuous implication for the fixed income market of some Eurozone sovereigns. So going forward, I think that will probably continue, and that's why the market is taking that as positive, because it's helping to mitigate, I think, the sovereign debt crisis.
All right, we've seen some of that liquidity, at least sentimentally, find its way back into the equity markets across the world as well, in commodities as well. How much of it is actually money coming out of the LTRO, and how much of it is just relief that European banks are now getting the cash that they need to be able to stabilize their operations?
Well, I think it's a combination of different factors, and I would make the following point, which you know, from a macroeconomic perspective is very interesting. I don't think that you need an LTRO or a series of LTROs to experience the risk-on environment that we've seen since basically the end of last year. I think that, you know, a great deal of what has happened in risky assets, it could be simply explained by the fact that we started to see a series of upside surprises to the macroeconomic data that has happened certainly in the US, but also in the core of the Eurozone. And historically, if you look at turning points in terms of surprise macro data, the risky assets environment has improved very substantially. So I think the LTRO is important for the specifics of the Eurozone banking system and the sovereign crisis, but generally the macro environment in the Western world has improved, and that I think has been one of the main driving forces of this risk-on return. That's our assessment. But obviously, you know, the LTRO helps the Eurozone, which is still in big trouble, we believe.
All right, let me ask you what will happen with Greek banks tomorrow, considering the S&P downgrade to selective default. Will they be able to participate in the LTRO using what kind of collateral? And if they're not able to participate, then what happens to the Greek financial system? How badly off will it be?
Well, ideally, as far as the Greek collateral, sovereign bond collateral is concerned, there are some measures in place which the European policymakers have preemptively aligned, anticipating again the fact that the rating agencies were going to downgrade Greece. And in fact, what is going to happen now is that the EFSF will provide a credit enhancement for the Greek bonds in the Euro system, and that will allow up to 35 billion issuance of Greek collateral in sovereign bonds to continue be accepted in the standard euro system refinancing operation. So there shouldn't be any major fallback of this initiative on bank liquidity. If there are some consequences in terms of bank financing, the Greek banks can always use the emergency liquidity assistance that the National Central Bank of Greece can continue to provide. It has a penalty rate, so it's going to be more expensive for Greek banks to get funding, but it's still an option that they can use. So I would exclude that the downgrade can trigger a dry up of funding from the central bank system for the Greek banks here.
All right, this is, in most commentary that I read, this is expected to be the second and the last LTRO. Is that how you see it as well, that this will be the last injection of, or mammoth injection of liquidity into the system?
Well, I think that this is a very interesting question, and you know, the euro system has got a communication strategy which is consistent with avoiding any pre-commitment. Our take on this is that the market has improved substantially since the announcement of the first two LTROs, and at the moment the conditions are not in place for the ECB to announce a third or a fourth one. But should market conditions deteriorate again, and we know you have mentioned during before our interview a number of risks which are there is a constellation of risk in Europe that could make contagion come back. Should that be the case, I'm pretty comfortable with the idea that the ECB would be there to backstop the system with more LTROs. But at the moment, market conditions I don't think are consistent with such an announcement.
All right, I have one quick last question, if you could answer it in 20 seconds, Silvio, and that is what happens to the euro? It seems to have found some strength in the last several weeks. Many people believe the second LTRO will prop it up, but there's a case maybe for the ECB to cut rates given the prevailing recessionary environment in Europe, and that might put further pressure on the euro, let's say a few weeks down the line?
Well, I think probably as far as the euro is concerned, the market is more looking at the evaporation of, let's call the sovereign risk premium in some eurozone countries rather than on the addition of liquidity that this operation deliver. I also believe that most of the consequences of, say, LTRO, which is around 500 billion, are already in the euro. So I think, you know, any very strong take-up would probably be good for the euro, but just because it will contribute again to reduce the sovereign risk, so it would be an indication that the region is there to stay and it gets stronger, basically. So I think it could be positive if there is an absolute surprise. Otherwise, I think the LTRO could be pretty muted in terms of effect.
All right, Silvio, we'll leave it there. We'll watch out for the number, as you pointed out, tomorrow.